Carson Block 被外界称为做空之王的浑水创始人。2017年6月7日，这位擅长围猎财务造假公司的投资者圈定了最新猎物敏华控股。
Yeah, I mean, look, we were looking for Hong Kong names, and this is one that jumped out as seeming to be too good to be true.
因做空中概股而名声大噪的 Carson Block， 手中握有20多家中外沽空公司名单，从东风纸业、汉嘉林业、分众传媒，到单日股价暴跌85%的辉山乳业，猎杀者的脚步从未停止。
To describe short-side activism, you try to knock over a bunch of dominoes. So we don't know how far the dominoes fall, and we don't know which dominoes are ultimately going to fall.
这位行踪神秘的做空者，身后的工作团队人数不到5人。他们是如何选择做空目标？空多对决的资本大戏背后，浑水是如何作战的
？Yeah, I mean, I used to get a lot of those email death threats. I'm going to put a bullet in the brains of your father, your wife, and
腾讯财经才约你2度深入对话传奇投资人 Carson Block， 实地探访浑水办公室，揭秘公司猎杀者的真容。
So let's start first of all with your most recent public research on Huishan. Where did you get the short idea on Huishan?
Well, we actually started looking at Huishan a couple of years ago, shortly after its IPO. And at that time, we felt that Huishan was too good to be true. The yields that the company claimed from its cows were, that was definitely too good to be true. We had concerns about the alfalfa as well. What happened then, though, was the stock corrected. It went down 20-25% in, I think, a few days. And so from our perspective, we couldn't commit to continuing to research Huishan at that time because stock could fall apart completely by the time we finished our research. So we just put it to the side and moved on. And then I think it was last May, I saw on my terminal, I saw a headline that Huishan it had announced that it had entered into a sale and leaseback agreement on dairy cows. And I laughed out loud when I saw that. It became kind of a little bit of a joke in the office pretty quickly. But then we checked the borrow on Huishan and saw that there was borrow. We looked at the stock chart and we saw that the stock had gone up a lot and then had kind of flatlined at $3, but there was a lot of valuation and market cap there. And so then we thought, hey, the stock evidently, there is a reason to consider shorting the stock, and let's pick up our research from a few years ago and see what we can find on Huishan. So that's how we got here.
How much did you borrow at that time?
Oh, how much stock did we borrow? I mean, we don't talk about the sizing of our positions, but it's and it was still it's still a difficult stock to borrow. I mean, the interest that we had to pay on the stock that we borrowed was generally about 15-16%. So you don't want to borrow too much for too long, obviously.
Yeah, it's not uncommon for you to see the stock's price up and down after your report, but Huishan took like 3 months. Did you expect that?
Well, okay, so our strong belief about Huishan before we published is that it was a manipulated stock. So anytime you see a long-term price chart that's a flat line, that's a good indicator that the stock is being manipulated. So now I don't know for a fact who was manipulating it, but anyway, we figured that by releasing the report, what we were hoping to do was we were hoping that there would be so much selling that whoever was manipulating the stock wouldn't have enough money to keep the floor under the stock price. We were wrong. It's quite possible that these people anticipated or were concerned about some sort of report, so they had enough money to keep the floor there. But I knew that eventually, someday, it would break. I didn't know how long it would take to break, and that's the thing with what we do. The analogy that I use to describe short side activism is that we try to knock over a bunch of dominoes. And so we don't know how far the dominoes fall, and we don't know which dominoes are ultimately going to fall. But in this case, the dominoes all did fall. It just took 3 months.
You just said you were wrong, but can we say that you were wrong in the case that you lost money in this case?
So, I mean, we were wrong about whether we could generate enough selling on that day to overwhelm whoever was manipulating the stock. So we were wrong about that. I just want to make clear, I'm not saying we were wrong about the thesis. Look, it would have been certainly more convenient if the stock had fallen apart closer to our report. I'll allow that. As I said, the borrow fees on the stock are pretty expensive, but overall, I'm very happy with the result.
You know the stock has some problem, and you know it's manipulated. If we were like 4 months ago, can you do anything else? Will you change your strategy?
Well, I mean, if I went back to May, the thing about every trade, okay, after every trade, you look back and you say, I was either too big or I was too small. We were too small.
Okay. And I'm looking forward to your reports on other HA companies. You said that you're going to release a bunch of them. Are they big names? Are they widely traded?
So we're looking at a few names in Hong Kong. A few weeks ago when we spoke, I thought that we were quite close to releasing a report, and this happens a lot in my business because we put there's so much detail in our reports, and there's so much information, and we want everything in our reports. Really, we like to think that they're perfect before we release them. So in this case, it turns out that we got a little bit bogged down in our research, and it's going to take some more time for this one company that I'd been thinking about. But in any event, yeah, I mean, I'd say that the market caps that we're looking at in Hong Kong are usually north of 8 billion Hong Kong dollars. And one of the companies that we've looked at is actually a lot bigger than that in market cap.
You said you know which has problem years ago. What about these companies? How did you get the short ideas of these companies?
Well, a lot of it is too good to be true. So if margins and profitability are too good to be true, sales growth seems too good to be true, these are the things that raise the initial questions for us. Or if companies don't seem to be subject to a business cycle where they've got down periods and up periods. Those are things that will cause us to look closely. And when you look at financial statements, if you suspect that there could be fraud, the first place that you want to look is actually the balance sheet. And you want to see how the accounts on the balance sheet on the asset side have changed over time. So the reason for this is if I have a company that is reporting fake profits, okay, so I'm making up a lot of my profits, that creates what I call a fake cash problem. Because if I had real profits, I would have real cash. And I could put that in the bank, and then the auditors could verify that that money is in the bank. But what happens when you're reporting fake profits and you have this fake cash problem, you have to come up with an excuse for why you don't have all this cash. So you'll see maybe accounts receivable blowout or an inventory account blowout, or very commonly what we see in China is a lot of CapEx and a lot of acquisitions. And so if we see that, then we really ask ourselves, okay, well, what sort of research would we have to do to confirm whether they're buying legitimate assets or whether there's a good reason for the accounts receivable to blow out versus are they using this to commit fraud? And so then a lot of it for us becomes a question of how, what kind of resources are needed to do this work. And we have to look at it on the other side. Okay, how big of a short position are we likely to take? How much of a fraud do we think this is? Because, to be quite frank, in the world of China stocks, and if you're going to say a company is increasing its revenue fraudulently by 10%, the market doesn't usually care about 10%. You know, if this were outside of China, 10% would be a big deal. But so we have to really think about how profound is the thesis versus the resources that are needed to produce a report.
Interesting. You know the culture of the market very well as well. How many people do you dedicate to each case in Hong Kong?
Well, so we have our internal team. So the core research team at my firm, including myself, is 5 people. And then when whenever we're researching something, we use consultants and investigators and other researchers. So it's, there's never a fixed team size, so it really varies.
So you work on multiple cases at the same time?
Yeah, we do. We're working on 2 or 3 at the same time. In this business, it's actually kind of hard to work on 2 equally well at the same time. So we tend to focus on one, but we'll try to move along 1 or 2 others in the background.
And your very first case, that is about Oriental paper, right? So that case, you flew to Hebei with a friend on your own to do the field studies and to talk to the CEO and such things. Do you still do that by yourself now?
The answer is no, but I wish. I mean, the field work, I used to really enjoy doing that field work. I think the last time I did field work was on China Media Express, when I went and met with some of the bus operators and I toured buses and confirmed that CCME's equipment was not on these buses. Also with Sino-Forest, I actually went to a meeting with one of their internal investor relations person. And I also, with Olam, I kind of sneaked into a meeting with management as well. But Olam was the last time I did it. The risk of being recognized is just not worth the reward. And I used to like looking at management when we'd ask a tough question and seeing how they respond and just seeing which questions made them most uncomfortable. But it's just not worth the risk of exposure at this point.
When I saw your stories, I see you can make a very, very good investigative journalist because all the work you have done. So now you might have trained your employees to do the work for you? Yeah,
most of the people on the research team, 3 of the other 4 people have been with me for a number of years. So they're very good at what we do. But one of the things that's important to understand about how we work is that each person has his or her own specialty. So we have an accounting analyst. We have somebody whose background is in manufacturing and sourcing. So he really understands the businesses from the operations perspective. My specialty is, it's kind of combining specialties really, legal, real-world entrepreneurship, and finance investing. So I sit atop the team and synthesize their work into my own view and our research.
I think if you go to China now, a lot of people may recognize you, and you are a loud short seller. So why to be a loud short seller? How does that benefit your strategy?
It turns out that shorting without speaking about your shorts these days, post-financial crisis, is a very, very difficult strategy. You've got the situation where globally central banks have just been creating money, and that's gone into the asset markets, and it just keeps pushing up equities. So even though there are companies that short sellers can find that where the stocks shouldn't be going up, and these companies shouldn't be getting acquired, the stocks do go up, and the companies are getting acquired. And it's been a very, very difficult time for funds that run the passive short strategy. So I'm not saying it doesn't work, but I think the best way to think about the funds that run these passive short strategies is that they are insurance for their clients. So when their clients put money with one of those funds, client isn't thinking, I hope I get 15% a year from this. They're thinking that over the long run, this is going to smooth out the volatility of my portfolio, And because when the market goes down, this will at least make me money. So most short funds that are still in business, I think their function is really more of an insurance business as opposed to generating returns, across, even during bull markets.
The regulators in Hong Kong crack down, like Moody's, Citron. What do you think of that?
Well, I think each case had facts that were particular to it. So I don't know that. What I took away from that was, we always are very, very careful. There's always more that we know than we actually say, because maybe we don't have 3 sources of evidence for it, only 2, so we won't say that. So when we look at what's happened with Citron and Moody's in Hong Kong, it's just a reminder that we have to, be very, very diligent in what we put in our reports and what we say publicly.
Is it because, like in Hong Kong, there is more individual investors than institutional ones? So maybe the shareholders need more protection, so they want to protect the individual investors more. So that's why they tighten their regulations.
Well, that's an interesting question as to why. I don't really. You can look at Hong Kong and say there's some things that Hong Kong does that are protective of shareholders. And you can also look at it and say, well, there's some other things where there are markets outside of Hong Kong that are more protective of individual shareholders. So I really don't know the policy reasons behind what they did. I just know that that's the playing field in Hong Kong, and you have to respect that.
We are now at NASDAQ. Like 2 decades ago, a lot of Chinese companies took pride in ring the bell here. And a lot of US investors, they chase after every Chinese concept, and that all changed. A lot of people say that you play a very important role in the change. What do you think?
Well, yeah, I think that's somewhat accurate. But what also has to be considered is that a lot of the companies that listed here a lot of them were frauds. So what we did was, it wasn't to make people say, oh, I hate everything that comes out of China, but it was to say a lot of these companies have problems. There have clearly been gaps in the system that's supposed to regulate these companies and protect investors. And so I think what we did was we caused a lot more scrutiny to be placed on these companies. And the change was profound, because my impression, say from 2010 before that, is that in China, US investors were kind of a joke, because we were considered to be so gullible, and we just we just believed everything. These companies would come to the US and say, oh, well, Chairman Wang has this thing called guanxi, which means connections. And American investors would just say, oh, guanxi, that explains why he can grow his business much faster than everybody else in the history of this industry has. And so what we did was, I think we opened up investors' eyes so that they looked at those, when they heard statements like those, they just said, you know what, I don't think this is true. And so I think that was the big change that we helped drive.
But nowadays, do you think the US investors are too sophisticated in Chinese companies? Because I do came across investors in the US, they will not touch upon any Chinese companies. Like before Alibaba's IPO, people say, oh, I know this is a good company, but I will not buy it.
Well, I think that some of the things that also complicated for US investors, so there are a couple of things that I think are issues that have remained unaddressed. One is the structure, the legal structure that a lot of these companies have when they list in the US. They are what we call VIEs, or variable interest entities, which means that as the shareholder of the list company, you actually don't own the main operating business. And I think that's a very dangerous situation. Now, to be fair, that a number of these VIEs, they have gone private, and even though in reality the chairman and whoever brings them private could have just taken the operating business out from underneath the public shareholders, to be fair, almost all of the time, the public shareholders have gotten paid. There have been a couple of instances where VIEs have just been robbed of their assets, but those were generally smaller reverse merger companies. But I think the VIE structure, I do think that's an issue. I have ideas on how to address it, but I don't think the investment banking industry here would find those appealing. The second issue really does come down to how much politics and business are mixed in China. It's very, very, even for Chinese business people, it's difficult to understand and predict the environment. But there have been, of course, high-profile cases of public companies whose chairmen have, whether in Hong Kong or the U.S., have disappeared and supposedly been, they've been detained. And I think I know that's something that scares a lot of U.S. investors, because you're thinking, how do I understand this risk? How do I price this risk, or the risk that another company will become politically favored and will crush the company I'm invested in? So from a foreign investor standpoint, the political risks, the political business risks of China or investing in China are they're very high.
And one thing is that you captured a problem in a company, like the political risk. The other thing is that you have to translate that to your U.S. investors to make them believe in you as well. So that is two things, right?
Well, we don't look at political risk when we're, that's not really what our short theses are based on. We've seen situations in which, I'd say, if you look at a company that we shorted in 2013, NQ Mobile, Wang Qi.
Yeah.
So that was one where it's a company that clearly did not have political protection, because CCTV had done an expose on it, accusing the company of cheating its customers. So that's one that we felt more confident shorting, because one thing is, in our position, we're sometimes worried that there'd be people who would really look to protect the company and help cover up the truth. And if the truth gets covered up, the stock might not go down and we might not make money. So that's something that we give a little bit of consideration to. But in general, when we communicate our theses really are, hey, this company is a fraud. We think at least this much revenue is fake. This undisclosed related party that is the main supplier or customer is not a real business. Here's the evidence. That's really our core way of putting together a China short.
Your father used to be a long investor. If he came up to you and said, I want to buy Alibaba, what kind of advice would you give him?
I would say, that Alibaba's a bit of a tough one for me. Look, there's a lot there that's genuinely impressive. Okay, I had a real world business in China before I started Muddy Waters, and I can tell you how difficult it is to scale a business anywhere, but especially China. And so Ma Yun has done an amazing job building that company. That's on one hand. On the other hand, you have political risks, and I know sometimes, people in the U.S. will say, yeah, I'm a little worried about Baba, it's so big and powerful. I wonder, if that's sensitive in China. I don't know. It very well could become sensitive. I don't know how to handicap that risk. And then on the other hand, yeah, there's an element of Baba that's too good to be true. And so if my father asked me for my advice, I guess I would just say, look, talk to somebody else. I don't have an opinion.
Is there any Chinese companies right now listed here in the U.S. Raise your eyebrows? You think you want to do a research on them?
There are companies, when we look in their filings, we'll see yellow flags or red flags, and that we'll think to ourselves, these companies are probably frauds. But the issue for us is that the bar. Okay, so if you're sitting around watching us talk about a given company that we've started researching, the bar for us to say this is a problematic company, let's say that bar is here. We're all skeptical people in my firm. We've been doing this for years, but the bar to convince the long shareholders to sell is much higher bar.
Yeah.
So the question that we have to ask is whether we think that within our resource budget, we can meet that bar. That's a different question. So yeah, we'll see these companies that are suspicious, but a lot of them we just say, I don't know how we would prove it to the satisfaction of the shareholders.
Recently, you published an article on U.S. market is more likely to default. So can you maybe elaborate more on that idea?
Sure. So I'm sure most of your viewers are aware that right now the politics in the U.S. are not exactly smooth.
The Trump rally.
Yeah. Well, yeah. We had the Trump rally, but the thing is, what nobody's talking about in the U.S. is that we have hit what we call the debt ceiling.
Yeah.
And so the U.S. government is not able to issue net new debt above this level. And so Treasury only has so much cash on hand. And that money, without our ability to borrow, which we already passed the debt ceiling middle of March, without the ability to borrow new money, so in order to borrow more, Congress has to raise the debt ceiling. And in the past 5 years, we've had that situation twice, and it's gone down to the wire. It's been very close in the past to where the Treasury ran out of money and was not able to make interest and principal payments on the debt. Fortunately, in the past, enough people from both parties came together and they raised the debt ceiling. But what's interesting here is that a lot of people assume that because the one party now controls the White House and each of the two houses of Congress, a lot of people assume that it won't be a problem to raise the debt ceiling.
Sure.
But I think it will be a problem because within the Republican Party, you have these factions that are very divided. And there's a faction in the Republican Party called the Tea Party. And the Tea Party, these are the people who were the ones who greatly resisted raising the debt ceiling in the past. I mean, their view is that they want to starve the federal government of revenue in order to force it to get smaller.
Yeah.
And so they really could end up, so my base case scenario is that the U.S. will not default. I think enough cooler heads will prevail and will avoid a default. But I think we get closer to a default than we have in the past, and a default is a real risk because if the Tea Party people cannot, if enough of them don't change their minds about not raising the debt ceiling, I don't think the Democrats are going to help the rest of the Republicans raise the debt ceiling. I think the Democrats would rather watch the Republicans commit political suicide than help them out.
And a lot of people think that we are now in a very dangerous late bull market. A lot of stocks are boosted by unnaturally cheap money. So does that mean an easier environment for you to have a short idea?
Yeah, I mean, so probably the number of bad companies that are out there is the same as it's always been, but the difference is you've got more bad companies with real market caps now than you used to have. So from a short seller's perspective, that's a positive. But on the other hand, with the market just constantly going up, it's actually pretty frustrating. And people seem to have forgotten about volatility. And the thing that amazes me the most is when you look at the implied volatility of the market, it's so low despite all of these massive geopolitical tremors, if not earthquakes, that we're having. So, and from a short seller's perspective, I guess if you don't think, I mean, volatility has to pick up in order for some of these short theses to play out. Because otherwise, if everybody is really complacent and the market just keeps doing this, a lot of the stocks that should fall won't fall.
The return is pretty good, like 16%. So is this much more or less than Muddy Water Research?
So for legal reasons, I can't comment on performance. You might have been referring to the flagship fund that we launched on August 1st of last year. And so that had less than half a year of performance. But we were very happy with the performance of that and our day one fund as well. So yeah, in terms of Is it similar to the returns that we produced before? Yeah, somewhat. I mean, obviously in the first 1 to 2 years of my business, we used more options because we had less money, and you know, you could make 200% a year. So can't compare, you know, can't compare to those periods. But generally, I like to put up about, you know, for this was pre-managing money for on my own money. You know, I would try to put up about 30% a year. That would be a decent year.
And you took like $100 million money from outside, and you say you will never take more than $500 million. Why is that?
Well, for what we do as short activists, it's very limited capacity, and even 500 is, I think, too high for what we do. So I don't know what the limit is. The other thing that we can do, if we come across a trade that's particularly that has a lot of capacity, we can always take in more money for purposes of that trade. But I think day in and day out, probably don't want to be too far above $200 million. That's my feeling at this point.
I look at the research saying that assets under hedge fund that is targeted on short companies is only like $5.5 billion. That's relatively very small. So is the circle very small? Do you all know each other and talk?
I think a lot of us know each other. It is a very small and shrinking universe of short sellers. I mean, talking, you know, occasionally. I mean, I sit in San Francisco, so obviously most funds are here in New York. London has a lot. I don't speak or socialize that much with fund managers and analysts who are based in London and New York. So, but yeah, just like anything else, I mean, people within the industry, you know, they talk to each other. I mean, at varying amounts.
What do you enjoy right now? For example, in the past, you said that you enjoy investigate into a company, you enjoy the field work, and now you don't do that. And here, the hedge fund society is here in New York and London, but you are not here. So, what's the most enjoyable time in your life like?
Heavy is the head that wears the crown. I now have a bigger business, and I do a lot of what I call principling. It's not a real word, but it's my version of saying that I have to act as principal. So running a business that is now bigger, especially regulated business, there's a lot of time I spend on legal. There's a lot of time I spend on just talking to vendors or potential strategic partners, marketing. So there's a lot that I do these days that's not directly involved in the research. And the problem, I really like doing the research, and I also like a lot of what I do as a principal as well. It's just the biggest problem I have is that it's two different speeds of thinking. Your brain runs at two different speeds. So if I'm marketing, or I'm talking to a potential client, or if I'm doing an interview with you, my brain is running at, you know, somewhat of a faster speed. But to do research, you know, really close the door and just read through a bunch of filings from earliest to latest, that requires a lot of uninterrupted time where your brain can move very slowly and you pay attention to details. And I get sometimes a couple hundred emails a day. I mean, it's very difficult to do these things now. You know, so it's like any other business that's evolved. I become a little bit less in the operations and more of a manager.
Thank you so much, Carson.
Thank you.
Thank you. So is this like a pre-war period in your office? Because we know that you have several Hong Kong reports at hand. Is it like pre-war period for your office?
Well, I mean, I wouldn't say that we're really, really buckled down getting ready to go to war. I mean, we're not looking just at Hong Kong listed companies. We look at companies in Europe, we look at companies in the US. A lot of these end up being nasty confrontations. It's pretty predictable what happens. We come out on a company and explain our thesis and why we're short. Company will, I mean, I could almost write the response in my sleep, where they say that, such and such, Muddy Waters Capital are short sellers, they stand to profit if the stock goes down. The report contains misleading statements, exaggerations, and falsehoods. We are considering taking legal action. So they automatically, these campaigns, they get pretty nasty regardless of where in the world they are. And you know, I've been doing it 7 years. People who are with me, most of us have been at it together for a number of years. So it's not like it was in the beginning where there's a huge knot in your stomach and you're really getting ready as though you're going into combat. It's you know, it's we're more calm about it than in the early days.
As you said that you have a lot of blowback from the companies you targeted at. So because they are very, some people say that the time is on the bull side. So if there's enough time and the investor is not sure about target, they usually bet on the probabilities. So if the time is long, maybe the short seller will lose. What do you think?
Well, I mean, so look, when we've analyzed our long-term track record, the vast majority of cases, the stock goes down over the long term versus staying flat or going up. I mean, we are probably over the long term, 65 to 70% go down. Now, and that's as good a ratio as anybody in investing has, especially when you consider that we're doing it on the short side, where again the markets are built to go up. But if we say it's 65% are wins and 35% are not wins, one thing is true, at the outset, I have no idea which is more likely to be 65% name or a 35% name. I wish I knew, and if I knew, then of course we wouldn't do the 35% names. But yeah, it's what we try to do as activist short sellers. We just try to knock over a bunch of dominoes and create enough pressure on the company that, you know, the dominoes keep falling and we get a win over the long term.
For those Hong Kong stocks, the Hong Kong market volume is not that great, and sometimes there is a manipulation maybe behind the company. So what's your strategy under these circumstances?
Yeah, if we think something's manipulated, that's a little bit of a tough one in terms of coming up with a strategy. I mean, we really have to think about whether it makes sense. And we could pull up charts of a bunch of companies in Hong Kong where the stocks have done this, and I mean, we're pretty certain those are manipulations. You know, with Huishan, we didn't get it as right as we wanted in terms of, you know, since we viewed it as a manipulated stock, or we felt it was highly likely that Huishan was manipulated. I mean, we were really hoping that we could break that manipulation a lot sooner, but it held out for about 3 months. So we don't have a strategy per se. We just try to be selective, understand where the sources of capital for the manipulation are likely coming, how much selling. So one thing that's important when we look at potentially manipulated stock is if there are not a lot of real shareholders, you know, by this I would mean active shareholders who could read our report and then change their mind about owning the stock and sell, then it's very difficult to see how you break a manipulation. You need what we call natural sellers in order to do that. So that's really the heart of our analysis when we look at those companies.
So for those Hong Kong companies, you do investigation into whether they have relationship with like potential buyout firms or large investors?
Well, if it's an obvious manipulation and fraud, that's not so important. But we want to understand who owns the stock, like who really owns it. So, well, I guess when I say who really owns it, what I mean outside of the manipulation group, who owns it, what are their motivations for owning it. And one of the problems is that you have a lot of these index funds that own these things. And this is where really the manipulation schemes in Hong Kong have become really such a problem, is that the idea is that if they can manipulate the market caps up to $1 billion or more, then these stocks get added to an index, and then Income Vanguard, Income BlackRock, and some of the other index funds, and they buy it. And so as the manipulators, what they're doing, they're making money by selling to the index funds. And so, but at that point, if you just have a bunch of passive holders of the stock, I mean, the people at BlackRock might believe that they own a fraud, but it doesn't really matter to them because it's in an index. So if we see a name like that that's manipulated, and the long holders are basically the manipulators, some retail, and then just index funds, that's not really interesting for us.
For those Hong Kong stocks, too many acquisitions and mergers is a red flag. And maybe they trying to raise too much capital is another issue. What else is on your radar?
Well, so yeah, M&A, but also a lot of CapEx spending. You know, with it, I mean, look, sometimes businesses are legitimately spending a lot of money on CapEx, but that's something that we have to look at. What are they buying? How much are they spending on it? You know, do they really have, you know, do they have real needs for additional capacity? I mean, that's something that we'll see when a company, maybe a company claims it's at or near capacity and that's why it's expanding, but sometimes we'll look around, talk to plant employees or people who know plant employees, and we'll find out that no, the factory is nowhere near capacity right now. And so then that automatically calls into question why they're spending money on CapEx, and then really what are they getting for that CapEx spend. So that's one thing that we look at. Too good to be true, in other words, margin outperformance, we look at that a lot. Sure, there are definitely some businesses that can consistently sustain margins above those of their peers, but you know, that's actually pretty rare. So when we see that situation, it definitely merits taking a closer look.
Is there any other pattern, like, for example, 6 or 7 years ago, when you are target on those Chinese companies listed in the US, they are like get listed through a reverse takeover. But what about Hong Kong companies? Do they have any pattern?
Well, there are patterns, but it's not something that we've taken a really close look at. And when I say that there are patterns in Hong Kong, there are networks of cross ownership. So you'll see the same people behind some of these companies, or you'll see some of the same entities that invest in these companies. So there are a lot of networks in Hong Kong that do these manipulations and these frauds. And if you follow them, or if you identify some of the players, you just kind of follow those players around and you'll see companies that are problematic. One example of that was a company that we wrote on in 2014 called Superb Summit, Qifeng. So Qifeng has not traded since we wrote on it in 2014, but that's one where there are just people behind it. We saw that they were in all of these pump and dump scams in the past where the stock price would be ramped and then it would crash. And yeah, I mean, that's what they do. Like, that's one of their lines of business, these people, is stock manipulation and fraud. So if you follow them around, every now and then you'll come across one that's big enough to actually short or think about shorting. So that's how to play that in Hong Kong.
What's the bar like in Hong Kong? People say that unless a company is fabricating like well over 50% of their revenues, the investor doesn't care at all.
Yeah, I mean, so doing what moves the needle for investors? What do they care about? I'd say it's case by case. The more of a blue sky story a company has, then really the more profound you need the fraud to be. But if it's a company that doesn't really have a lot of expectations, it doesn't necessarily have to be that profound or that large amount of fraud. And it also goes back to to when I was talking about who owns it and why do they own it. So if you have a large, for us when we're looking at Hong Kong, what we want to see is foreign institutional owners other than index funds, because those are people who know us. They're people who can read the reports and provide and have a more sophisticated understanding of what we're saying than most retail does. So a situation like that, even if it's not 50% fraud on the top line, might very well move the needle for those types of investors. It's really case by case.
You got a lot of feedback from the companies, so it's like competition pretty going head to head. It's pretty fierce. What's the office like during the wartime?
Well, yeah, it's interesting because in the very early days, the way that the analogy, the description of what we did that I used a lot was, it really is like combat, and somebody has to go down, either the company or I do. Because in the early days, it didn't have a reputation, people didn't know me, and so so I think a lot of investors, to them it was binary. Either Carson Block's a fraud, or Orient Paper's a fraud, or Rhino's a fraud. So, I had to win those fights convincingly in order to get where I am now. I mean, now we do things that are more complex, so harder to prove that the company has problems. The opponents are much more sophisticated. They have a lot more resources to fight back. Almost every time we publish on a company, first thing they do is they pick up the phone because there's a crisis communications firm, or really probably 10 of them, calling them and saying, hey, we have the playbook on how to respond to this. So we choose much tougher opponents than we used to, and those opponents are more sophisticated. So as I said, we win 65-70% of the time over the long run. We don't win 30 to 35% of the time. If that had been the case in the early days, I couldn't have gotten here. Now, yes, from a reputational perspective, we can take the occasional loss, and I don't think it's a big problem for our reputation. I mean, when you do what we do, there are always critics out there, and so and these critics, a lot of them actually really hate us because they'd owned some stock in the past where we did get a big win, and so the moment we come out with a new thesis, they'll bring up things that didn't work, on the chat boards or on Seeking Alpha or Xueqiu or what have you. So that's just a fact of life, and you can't, in my business, you can't really let that get to you. You just have to understand that you cannot win 100% of the time over a sustained period.
What kind of response do you like to see on the company side? Like if they are buying back their shares, is that an aha moment for you?
It's one of those things that makes me, that makes me kind of chuckle now, because when a company says, okay, our response to a short seller saying that we're a fraud or, that our business has serious problems, our response is to buy back more stock. When you think about it, okay, and a lot of investors initially cheer that, and they say yes, and then they'll buy the stock as well. But when you step back and think about it, all right, if the short seller is correct, if this company, is a flawed company and the stock should not be selling here, it should be selling here. Well, for the company to be buying shares here is actually taking what is a bad situation and making it even worse. So I think that investors have this programmed response to, at least in the short run, they love the idea of buybacks. But over the medium term, I think the implications set in for them that, oh wow, the company just used a bunch of cash and the stock is still falling, and man, that really doesn't seem like it was such a good idea.
Many investors praise you for your research ability. You have stated many times publicly how you research into a company. Is there any secret that haven't been told? How do you stand out from other, like short sellers or even local companies who know the industry or know the local situation better?
Well, I mean, there are a few things that I think got muddy waters where we are. For one thing, we are very, what I call, multidisciplinary. So most investment research is produced by people who are investment people, and maybe they just have MBAs in finance. I don't want only that. Okay, we have accounting. We have one or more accounting analysts, or we have had one or more accounting analysts. We have lawyers who work with us on research. We have business operation experts who work on the research. So by bringing all of these different perspectives to bear, I think we understand businesses far better than most investment analysts do. So that's one thing that differentiates us. Something else is obviously our ability to communicate it. I'm a pretty decent writer, and one thing that's always been important to me, especially when I've written on Chinese companies or something else that's pretty complex for the average investor, is it's really important for me to simplify and explain and educate the reader, because they have to have the background. So if you can think back to when the first few reports that I wrote on Chinese companies that were listed in the U.S. investors did not know what Gongshangju was. So I had to explain, okay, SAIC, Gongshangju, this is what it is. These are the type of records that they keep. This is how you access them, and this is what we've learned from them. So there was a lot of education involved. And so one of the things that I've done in writing that I think has made us successful is I try to provide readers with the background that they'll need to understand the information that we're presenting.
Mm-hmm. And you hire people to help you, like consultants to help you work on a project. How to prevent them from profit from this case illegally?
Yeah, sure. So a lot of times when we engage consultants or law firms, we don't let them know that we're muddy waters. So I own some other entities, and we'll use one of those entities to engage them, and we'll tell them that we're just a generic hedge fund or maybe a family investment office. So that's one way, is to keep them from knowing who we really are. Other times we do have to open up to our vendors, and if we do, we just make very clear to them that you're not permitted to in any way trade on this, to talk to anybody about what we're doing. And if we're working on a project and we're getting ready to release a report, and we see trading there that looks to us like somebody is front running us, then we will not release the report. So if you go and buy a bunch of put options or short a bunch of stock, you're probably going to lose money, because we're not going to release that report until we're convinced that nobody is front running us.
Mm-hmm. You once joked with your wife saying that a death threat is kind of a performance indicators for you. Do you really get those kind of death threats?
Yeah, I used to get a lot of those email death threats, some of which were pretty explicit. Well, one that that I remember from after I wrote Rhino, which was our second report, was, I'm going to put a bullet in the brains of your father, your wife, and whoever wrote this used their real first names, and then you. And so, I thought that was a little bit nasty. But yeah, the thing is, when you get these threats, at least when I got these threats, I wasn't so much worried about the people who sent me those threats, because I figure if you're going to kill somebody, probably the dumbest thing that you can do is to warn them. But I'm more worried about the people who have those thoughts and were not sending me the emails.
Has ever any company contacted you privately for a private settlement?
When you mean a private?
Like they know you're investigating in them, and they know that you're going to release reports on them, and they contact you, say, well.
No, there was something that happened a number of years ago where somebody was going around Hong Kong saying that he was with Muddy Waters, and he had a business card made up. I think he said his name was Sean Coffey, Director of Investigations. And so I ended up hearing from a board member of one of these companies, an American board member, and actually somebody whom I knew. And he said, yeah, I want to let you know that we were contacted by Sean Coffey, said he's Muddy Waters, and that and he said that that Muddy Waters was about to put a report out on the company unless the company paid $5 million. And so the thing that really was frustrating at that point was we were working on that company. And so I think what happened was, it was going back to one of the questions you asked earlier, I think it was the agent who we were using to pull the Gongshangju files who realized, okay, I pulled files for these guys on Sinoforst, and they wrote on Sinoforst, on Spreadtrum, and they wrote on Spreadtrum. And so now they've asked me to pull files on XYZ, and so I'm going to go to that company. And so, that's the closest, and look, and so as a result, we never published on that company. We had to cancel the project. I informed the FBI of what had happened, but no, I've never been approached by a company looking to. I mean, we try not to let companies know that we're looking at them, and usually, if they figure out that somebody's looking at them, usually they just they make it really hard to access information, or they'll try to look a lot busier and a lot less fraudulent for a few weeks.
And you set up the Muddy Water Capital over a year ago. What's the relationship between Muddy Water Capital and Muddy Water Research?
Sure. So Muddy Waters Research is a website, and it's owned by Muddy Waters LLC. So all I did was basically set up a new entity because I was setting up a new business, so I was setting up this fund management business. I could have used the existing Muddy Waters LLC to set up to do fund management. I just thought, there were some lawsuits against that, and if I'm setting up a new business, better to start with a new entity. There's no real, so basically Muddy Waters Capital publishes its research on the muddywatersresearch.com domain, but it's pretty much very similar to how it was before. It's just now we have outside capital that we manage.
Does those outside capital give you more pressure? Just now you mentioned about the Muddy Water Research, they have pretty good results. But what about Muddy Water Capital? You are now managing others' capital money.
Yeah, so there are pros and cons from my perspective of managing outside capital. So some of the pros are, now that we have fee-paying capital, I was able to hire employees to work on the infrastructure side of the business in operations. And before, that's something I would have had to pay out of my pocket, and so we didn't have employees who were dedicated specifically to infrastructure. So having people dedicated to infrastructure makes my life a little bit simpler. However, because we now manage outside capital, the operation side of the business is much more complex, and there's a decent bit more regulation of my business now than there was before. So even though there was a simplification, now there are additional complexities. In terms of the client side, we have great investors who understand what it is that we do. They understand that our returns are very spiky because they really correlate to when we're out there on a project. And you want to make them happy. It is easier in some respects to only worry about disappointing yourself as opposed to disappointing others. But so far so good.
Shall we take a look at your
Absolutely.
office? Yeah.
Sure.
I heard that a lot of people, like in your office employees, they have fictitious names just to protect themselves.
It used to be that way. Now that we manage outside capital, for the most part, we use real names. But some people who have significant exposure, elsewhere, they'll still use pseudonyms.
Oh, I saw a lot of artworks around here. Those is Focus Media. So that is your target all over the place.
So yeah, with Focus Media, this one. So one of the things that Focus Media did to facilitate its fraud was it claimed to purchase a bunch of companies for massively inflated prices.
Yeah.
And they did that to burn off what we call fake cash. So when you commit fraud, you generate fake cash, and you have to have an excuse to get rid of it. So Focus Media had acquired all of these companies and then wrote them down saying, oh, well, there was a financial crisis or some other reason why we're not able to realize the value. And it was actually really laughable. I mean, when you consider just how, if you were to believe them, and you look at the number of companies, and this is not a complete list of the companies
it's already a lot.
But yeah, that they're saying, oh yeah, we bought this and we, flushed it down the toilet. And it was just amazing that you had investors in the U.S. thinking that Focus Media was an honest company and a good operator of businesses, when one of two things is true here. They're either committing fraud on a significant scale, or they are horrible at operating a business. So
I heard once you regret not doing a follow-up report on Focus Media. Is that true?
it was not Focus Media. It was it was New Oriental Education, Xindongfang, which we have a memento of Xindongfang over here. I mean, New Oriental was definitely one of the companies that we didn't get a win on. But anyway, then I realized
That's the movie.
Yeah, so I learned that they put out a movie about Yu Minhong, and I especially when when we know that New Oriental is a fraud, this picture, it's a U.S. listed fraud. This movie poster picture was just really humorous to us. So we had to get a copy of the movie poster from China, bring it to the U.S. and have it framed. So look. He won, we didn't win. I always did regret not doing a follow-up. There were reasons we didn't do a follow-up at that time that I think we had some very strong evidence of some more lies that the company was telling. Would that have made a difference? It might have. I can't say for sure.
This is a beanbag. Is this where you think of all the ideas, like think of your thesis?
Well, this is not my beanbag. My beanbag's elsewhere, but yeah, I mean, a lot of what we do is reading for long periods of time. It's also thinking creatively and trying to solve puzzles. Why is the company doing this or not doing that? And a lot of also what I do when I write, I have to really think about how to explain, going back to the point that we discussed before about how it's really important for me to be able to educate readers and give them the background that they need.
Yeah.
So I think a lot of what we do in our business is actually a very creative process, and it requires a lot of slow thinking. So this is a very comfortable place to read through an annual report or to think about how I'm going to write something or explain it, or to just try to figure out what a company is doing. So yeah, we try to make sure we have enough space in the office for people to just relax and slow down and do their work that way.
You have a lot of ideas, so how many of them actually make it into the research stage? What's the percentage like?
Well, I mean, it's tough to say because it's, in terms of just, okay, so if we take at the top of if we say there's a funnel here, and the top of the funnel is all of the theses that we come up with or we come across, and then moving beyond that to stage where we've done at least some research, probably 20-25% will make it to a stage where we're doing some research, and then maybe 30 to 40% of those make it to the point where we're doing serious research, and there's a good chance that we'll come out with a report. And once we get into that stage where we're doing what I call serious research, probably about 3/4 of them will result in a report or some sort of activist campaign.
There's a dollar note there. What's that mean?
That's a $7 billion bill. This is Alan Chan of Sino-Forest right here. So this artwork appeared in our report.
You're really a bad boy. This one.
Yeah, so I think the FT actually reprinted this one. So I don't recall whose idea that was for the artwork. It might not have. This one might not have been mine.
By you.
No, we did it. I just don't remember. If internally, I don't remember if this was my idea or somebody else's idea.
Okay. I think it's yours.
Might not have been. We all spend a lot of time when we know there are going to be graphics and reports. Everybody gets pretty excited, and we spend time thinking about what the graphics should be. So, I mean, over there is American Tower, and so that was basically a craps table with different countries on it. And I know that we talked. That was the product of a decent amount of discussion. And then here. This is one of my favorites because this is probably one of the most insulting pieces of art that we've done. So this had to do with NQ Mobile or Wang Qin, and so this is a clown, and the reason why we did this piece of art was NQ Mobile was supposed to, it was an app that supposedly made your phone more secure.
Yeah.
But what we realized when we had people analyze it was that although the data was technically encrypted when it was sent, the string of data also had the encryption key sent with it. So it's very easy to just intercept the data, take the key, and decrypt the data. So we said it was like having one of those briefcases that people would lock to their wrist with a handcuff, but with the key sticking in it. So anyway, we turned that into a clown, which was apt for NQ because those guys were some of the sloppiest fraudsters I had seen ever, and they had a fraud that had a market cap of well over $1 billion. So they were clowns, and here's the clown running with the key to the briefcase. So.
And that's your idea?
I think a lot of it was. There might have been a few of us. I mean, I might have, if I remember correctly, I had the idea of the briefcase with the key sticking out of it, and then somebody else said, yeah, but they're clowns. So, okay, why don't we make it a clown running with that briefcase and, holding the key in an easy to grab place. So, yeah, so I think it was partly my idea.
I don't care how long you're gone, I don't care how long you stay, but good kind treatment go bring you home someday. But some